Well done. Awesome segue. How are you, Bill?
I'm doing good today. I was saying it's raining in New York, but it's that happens in the month of May, so we're all used to it. We're just why complain?
So what else happened in the month of May? People start hearing about that. People start saying sell in May, go away in the stock market, right? Everybody's always concerned about the summer doldrums of the stock market. But I think that's something you want to be careful about this time around. The stock market crashed in April. Again, the stock market crashed in April. I'm going to repeat it one more time so everybody gets this. The stock market crashed in April. That means that the New York Stock Exchange BPI, all the breadth indicators, all the supply-demand indicators got washed out. And the way, CNBC, the Wall Street Journal can't do this whole lesson about the BPI and breadth and indicators and washed out and oversold. They're going to have like 0 subscribers. They have 1, it'd be me. So they train people to say, okay, bull market, bear market, that's it. Nice and simple, nice and easy to understand. You keep watching TV. They have the missile sounds when they present the ticker symbol. It's really exciting. Everybody loses money. Nobody does very well. So what we do here is we tell you the truth and help you understand it the right way. That's why we're here, this mentoring program. So the right way to think about the market is it was reset. There was a reset. The bull market has been reset. That's the way to think about it. You're in a very long-term bull market, multi-year bull market. The crash was not that anything was broken. It wasn't the 1987 tech glitch crash. It wasn't the 1998, long-term capital management, needs to get bailed out or the whole market will crash. It's not 2008 global economic credit crisis. It's nothing that big. But anyways, there was a lot of arguments to be made. The stock market, we're not yet in that internet 1990s phase. People are thinking about AI. You're starting to see it now in the quantum computing stocks where they're just going nuts. But we're not in that mania yet. So when you have an S&P 500 that has a PE of 23, now all of a sudden there's a trade war. No one's quite sure what's going on. They're getting used to the whole arrival of the Trump administration. Okay, so the market tanked. And I think that the powers that be did a lot to tank the market. I think a lot of people and fund managers who should know better were tricked out of the market. I think algorithms were tripped and stocks were automatically sold to knock stocks down. You saw these quantum computing stocks that were trading at 50 cents, 90 cents. They went to $15, $20. It's very hard for institutions to get into those stocks without running the price up. Knock those things down. So we have a reset. Forget about the crash and what does it mean and what about the economy and forget about all that stuff. All you need to know is the market was washed out, reset. Now, when you have a market that's washed out and reset, again, it's the beginning of a new bull market. It's reset, beginning of a new bull market. That's it. And when you have a market that's washed out and reset, in technical terms, the New York Stock Exchange BPI and a lot of other major breadth indicators got way oversold, meaning low readings. For that to have happened, you've had boatloads of selling. Anybody who had stock that they were going to sell, they've sold. Nervous investors sell first. People that you can't pry stock from their cold, dead hands, they sell last. Short sellers get overly hyped up and they start taking bets by selling to bet on stocks going lower. They have a certain amount of money that they can spend on their shorting of stocks. And all of a sudden, stock market bottoms out. So any selling is out of the way. Generally, when you get into that sort of condition in the stock market, it's very easy for stocks to go higher. And any sell-off, any dip that you see gets bought. There's not enough sale order ammunition out there to really take on these bulls. It doesn't exist. It's not that they're not bearish. It's not that they don't think stocks are going to go. They just don't exist. They're not even in the game. They don't have a say. They don't have a vote to cast in where the stock market
dollars,
right, with their dollars and shares. So stock market's reset. Now, when the stock market gets those reset levels, for about a year after that, you can't knock the market down. So if the BPI, the breadth indicators, went oversold, and this time they were pretty deep oversold. So the deeper oversold, it's like a slingshot or a catapult. You pull it back. If the breadth indicators were oversold 6 months ago and the stock market looked people were getting a little nervous, thinking there might be a sell-off coming, Bill and I would be laughing about it. Say, look, the BPI was just oversold 6 months ago. That was like yesterday. All right. If the BPI was oversold 6 months ago, it's going to be very hard to push prices lower. It's going to be very hard to continue the bear market. It's going to be hard to even have a correction or even a dip. A correction is 10% or more off the highs. A dip is, I think, 5% or more off the highs, and a pullback is like just a little whatever. It's hard to have even any of those things. The small cap Russell 2000 yesterday declined, I think, 2.85% or something like that. That's a pretty big sell-off for a market that just recently reset. And again, if it was 6 months ago, Bill and I would be saying, everybody relax. The market was just reset 6 months ago. I mean, we're not going back into a bear market. It was just 6 months ago. Here we find ourselves May 22nd, stock market crash, bottomed out. It just moved out of oversold territory, column of X's. And as you can see right here, anybody who knows how to read point and figure charts, just bear with me for a second. But the far right column is the most recent column. Bill, let's shut our cameras off for a second. Okay, so you can see that far right column. And you might not be able to see it unless you look very closely, but at the bottom you can see the years. Like on the left you see, I believe, 14, 15, 16. Those are the years. 17 and 18 are pretty close together. There's a big wide space between 20 and 21. It's because there was a lot of column changes. So point and figure charts only change when there's a big move up or a big move down. They're not like line charts or candle charts where they change with time. Like if this thing didn't move, a candle chart or a line chart would just move sideways at the same level. This, on a point and figure chart, wouldn't change at all if there's no move. Time passes doesn't mean anything to this chart. That's why you see some years have more column changes, some years have less, meaning some years there's more big changes up and down, other years not a lot of activity. So if you see the far right, when this data moves up, when the percentage of stocks on buy signals moves up, it's an X column. So the far right is the most recent column, meaning most recently this thing has been going up. You can see we got all the way down in that previous column, the red O column, got all the way down to 20, which means only 20% of stocks were on buy signals. That means 80% of stocks had moved to sell signals. That means 80% of stocks breaking below support levels. It takes a lot of selling. So much selling had happened that we got to levels not seen since the pandemic, 2018 low. All of the times we were down at this level, the market was reset and gunned higher afterwards.